Modernization of beneficial ownership reporting. The SEC issued in advance notice of proposed rulemaking in 2010 to fix proxy plumbing, but didn't take action. Now they want to pass out more voting rights before fixing it. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today, we are going to be going over a few things with AMC. First, touching on the brand new rule that the SEC is putting out, because we have to talk about it, because you need to comment by June 27th. This is going to worsen the voting process, and it's going to cause a few major problems if it does get passed. I have a couple notes right here that we are going to cover. All I ask you guys to do is please hit the like button. It helps me out. Also hit the subscribe button. Drop a comment down below. Let's get into the video. Okay, so the SEC is putting out a rule that is in the proposal period. This is the good news, that it's still in the proposal period. However, this is a reopening of the comment period for the proposal. So it is close to potentially getting pushed through or denied. And it's conformed to the Federal Register already. Conformed to the Federal Register version already. So that is the bad news, as well as kind of good news that it's still in the proposal phase. So it's not passed just yet. It's also good news that AMC hopefully will have the lawsuit dealt with on the 29th and 30th before this even can go through, right? So institutions wouldn't be able to overthrow a vote. Now, there's major problems with this rule. This is giving derivative holders rights to actual shares. In other words, you wouldn't have to purchase shares in order to vote. So for the vote for the conversion and reverse split, if I owned 100 shares, then I would have 100 votes. If I owned one call contract, whatever it may be, I would own 100 votes. So now owning the right to shares, right, because you have the right but not obligation to purchase shares when you hold a contract, is now giving you voting rights. And we know institutions purchase millions of contracts at a time, which could account for hundreds of millions of shares temporarily that they can just hold temporarily and easily vote and then get out of their position and purchase further out of the money options. This is not a good thing. Institutions would hold millions of voting rights. Okay, so this is already horrible. They can basically, this will give institutions the right to basically overturn every vote ever. Absolutely every vote ever. This will also screw up accurate share counts and shares accounted for. In other words, this is going to be very, very hard as to, okay, say you're a company, you want to vote. You want shareholders to vote on something so that you can kind of see, you know, there's this many shareholders, there should be this many votes around that, right? But now there's going to be hundreds of millions over and you don't even know where the votes come from. This is horrible. And the fact that it's even a thing, especially that, you know, SEC issued an advance notice of rulemaking in 2010 to fix proxy plumbing, but didn't take action. Now they want to pass out more voting rights before fixing it. It's just horrible. The SEC is not doing their job. They're doing a terrible job as we speak. Now, the short exempts for June, I want to talk about real quick, correlating it over the chart, because they may be having trouble to push AMC even lower. And we've been talking about the cycles. We've been talking about how low we are getting with AMC, but I want to point out a couple things. February, 11 million short exempts. March, April, both 8-9 million, and then it dropped May and June, looking kind of low for short exempts. Now, let me take you on this run here. February, right here, we saw this little gap up and this valley, this peak, and then slowly into the sell-off, but we came into March, okay? If you take a look back at this, March had 8 million, dropped a little bit. Same exact thing happened. We got this flush, we got this valley, scaled back up, and then another valley, another reset, right? Then April hits. April, once again, has the valley right at the beginning, scales up, comes back through. And AMC, since before February, right, January 10th or so, has hit this low. It has not gone lower. This tells me that we are nearing this relative low again, and they can't push AMC too much lower. They're just bouncing it back and forth, which leads me to the next thing. This video is going to be all about short selling, naked short selling, short exempts, a horrible job the SEC is doing. We are back on the threshold securities list for AMC. This is an even better thing to see. They are having trouble delivering shares. They can't deliver shares. And AMC is basically pinned at the bottom, in my opinion. This is a relative low that AMC will see right around $3.80. They're having a lot of trouble here. You can tell by the patterns in the chart based off of where these short exempts get high, where the short exempts start to lower once again. And now we are put back on the threshold securities list right when AMC nears that bottom again at that $4 level, right at the same exact time it hit it back in January, and then the same exact time it hit it back in April. Now, if we have time, I'm going to play this clip for you. Naked short selling, the Wall Street conspiracy. But before I play this clip for you guys, make sure to pop in the Discord. The link is right under the video. You guys will not regret it. We have options trading alerts in there, and I'm in there on the daily. Also, guys, I usually don't do this, but I posted a crypto video yesterday, and I go over 2 stocks that I'm buying on Monday, so make sure to go watch that. Also, 2 cryptos I'm loading up on. Make sure to go watch this video. It's actually very, very helpful video. It's a good video. If you guys do want to see that, make sure to go watch that before Monday. I will put it in the top of this video at the end when the outro plays. Also, guys, before June is over, today and tomorrow is basically the last days you could do it because it takes a few days to actually go through. Use my link, download Moomoo, and make a deposit to earn up to 17 free stocks, free Tesla stock, free C3 AI stock, and more benefits, as well as a $100 cash coupon that you can withdraw. All you have to do is press my link and check how much you have to deposit to get what. This is the best incentive that they had so far, so make sure to go do that. Those links will be right under the video as well as pinned in the top of comments. I love you all. Lottery Socks out. Hopefully we have time to play this clip.
As smaller companies continued to be destroyed, and as average investors on Main Street lost their shirts to naked short selling, John Harmer, a former California state senator and lieutenant governor under Ronald Reagan, became intrigued with this little-known practice.
Like most people in this country, when I first heard the term naked short selling, I had no clue as to what they were mentioning.
But Harmer soon discovered that naked short selling had decimated the value of many small companies.
I sat down with one individual who was able to go onto his computer and in real time show me what was happening into the stocks of several of these companies on that day as naked short selling was taking place.
The evidence was astonishing.
Everybody denied that it was brokers in the big brokerage houses that were doing it, but we were able to identify very clearly that that's exactly who was doing it, driving down the value of those stocks, driving the company out of business. A lot of that was going on without these CEOs knowing it, or they knew it was happening, but they just said, don't tell me about it. I don't want to know what the guys in the back room are doing.
Harmer began to dig deeper to learn more about the fraud.
I turned all the sources I could think of, the internet, lawsuits, etc.
Armed with this information, he took his concerns to the Senate Banking Committee, who had oversight of the SEC.
I went to Senator Bennett in the Senate Banking Committee and brought to them then specific examples of the flagrancy of what was being done and the inaction by the Securities and Exchange Commission in the face of this evidence.
Senator Bennett jumped on board, but Harmer and Bennett faced an uphill battle convincing other senators to even acknowledge the problem.
They had no clue what I was talking about. And yet I would tell them, look, we're talking about the economic future of this country. We're talking about the segment of industry that produces the most jobs, small business. We need to keep them alive and well. And they're being destroyed by a very small group of predatory people who are using their power to make a fortune for themselves, a fortune that often isn't even taxed the way it works, and then walking away from the ashes.
Harmer and Bennett continued their crusade to clean up Wall Street.
Now, Senator Bennett, he was willing to go forward, he was committed, and in fact, we had this piece of legislation drafted.
But just when it looked like Congress would finally take the lead against fraud on Wall Street, Harmer and Bennett ran into a stone wall, one erected by the Depository Trust Clearing Corporation.
They have such enormous power. They are able to be totally off the record, totally invisible, but wield enormous impact upon what's going on.
As the fails to deliver problem continued to escalate, advocates and economists began to take a closer look at the DTCC. Especially a process they use to clear the trades called the Stock Borrow Program.
The broker looks for shares, can't find them, says to the seller, can't find the shares, he says proceed.
The DTCC steps in. The Stock Borrow Program essentially fills that role.
And this is where critics believe the problem lies. When a broker transacts a short sale and no shares are available, the Stock Borrow Program allows the transaction to go through without borrowing the stock from another shareholder's account.
So there are now two sets of shares representing the same shares. Those shares appear electronically in both accounts. It's the same share. One of them is a phantom share. We know that the DTCC is clearing trades even when they can't locate the shares through the stock borrow program. In those cases, the stock borrow program claims their shares but never finds them.
Since Suzanne Trumbeth first learned of the fraud in 1993, this little hole in the system has grown into a chasm.
The DTCC, through its stock borrow program, has in effect created hundreds of millions of phantom shares.
And it multiplies on a continual basis.
On any given day, there are between 500 million and 1 billion shares have been sold and failed to deliver.
Your stock is getting lent to this firm, to that firm, to this firm, to that firm. Each firm gives each other an IOU, but at the end of the day, if everybody went and claimed their stock and said, give me my physical certificates, they would not be able to do it.
Having spoken to people within the market who admitted that they were actually doing this, they were taking advantage of this loophole, we realized that this was an immense problem.
It's so big, it's so systemic, it involves people with so much money, multiple billionaires. Well, I wonder how they're making that much money. Well, I have my ideas from this activity.
They operate from an inherent position of conflict of interest in which their owners earn profits off of the transactions of naked short sales.
Why would we take an organization that's privately owned and put it in control of $30 trillion a month of transactions with essentially limited supervision? Who owns it? The New York Stock Exchange owns it. All the prime brokers own it.
Its members just happen to be Wall Street.
The same parties who would have to enforce delivery.
And there's been no forced accountability.
So the fox is watching the henhouse.
And the fox is eating all the eggs.